My name is Dennis Cisterna. I'm the co-founder and chief investment officer of Sentinel Lease. We're a private real estate investment firm focused on single tenant, office, industrial, and retail properties all across the country. Well, I think a big thing right now for everybody is just seeing some level of stability in the marketplace. We've seen a lot of volatility due to interest rate increases. We've seen a variety of global and national political tensions. And all of that unrest puts investors, the best way to put it is, it's a tense situation. And so when you have that level of tension in a market, it disrupts it. And without that lack of consistency, it makes investing on a high level very difficult. And ultimately, so I think what we're really looking for coming out of this year and into 2026 and beyond is some level of stability and the market's resetting. Sometimes when you have these rough periods in the market, it takes a few years to work through that. But I think the market has been very thoughtful in its approach and how it's responded to the rise in interest rate increases and everything else. And so I think everyone is not thinking that real estate is going to be lighting the world on fire over the next 4 or 5 years, but we're just getting back to a normal, solid basis. Well, one of the biggest benefits that we have right now, whether you're a huge investor that manages billions or a small investor that's just getting started, is our access to information is greater than it has ever been before. So whether that is headline news, whether that is individualized data down to a zip code, it's all available at your fingertips. And that advantage or that advancement in technology has been incredibly helpful for investors of all size to really be able to keep their finger on the pulse of the market and adapt accordingly. Well, one of the biggest things that we're dealing with right now is that there's something called a bid-ask spread. And what that means is buyers want to pay a certain price, sellers want to sell at a different price. And when those things are not on the same plane, deal volume goes down. And when deal volume goes down, the entire market slows. That means not only are you buying and selling less, but that means there's less insurance business, there's less legal bills, and there's a huge trickle-down effect well beyond the commercial real estate world. So what we're looking for right now is trying to find deals that make sense in this market so you can have consistent volume and growth. And so the way that most folks are dealing with that is they become hyper-focused on the things they know best. And so instead of trying to paint the entire market with a broad brush and do a bunch of things, people tend to get localized and very specific in their strategy so that they can execute that at a higher level and make up for maybe general volume they might not be getting anymore. Well, there's a couple things. I think the hot word of the year or possibly the decade is AI, right? And so when you think of AI, you might think of ChatGPT and how it's great to make a funny meme post now with your head on a candy cane or something like that. But we are making such tremendous strides in terms of the analytics sides of things, the data processing and management of that. And so what that is doing, it is speeding up the industry's analysis of opportunities much, much faster. So you have that in a practical sense where everybody can take advantage of that onset of new technology and information available. But then on top of that, from a pure real estate perspective, you also have these data centers being built all over the world. And there's a lot of good with that and there's a lot of bad with that. And it's really finding the opportunity within that space. If you want to play in the data center space, you've got to understand the huge power, water, political constraints of getting any of those kind of things done. And then ultimately, what is the capitalization of those type of properties? If you look at the way that AI companies are being valued right now, it looks like a hockey stick where the growth potential is unlimited. But at some point in time, you have to reconcile that with actual revenue and potential profitability. And so there may be a point where the rubber meets the road where you're saying, wow, well, we've got all these data centers, but none of these things make money. So what is this industry really? So we're gonna have to see that industry evolve towards more near-term and especially long-term profitability to keep investing in that sector. Well, I've been coming to this event since, I believe, 2011. So this is year 15, year 16 for me. And I've enjoyed it in a variety of settings. When I first came here, I was a capital markets advisor, so I would help operators raise debt and equity. And this conference then had such a unique value to me because it brought so many great stakeholders together, and you could collaborate and network with people that you may not get access to otherwise. That was what it was like 15 years ago. Now that I'm an investment manager and I operate my own fund, I am extracting a different type of value where I'm understanding the best practices, the best technology, legal and compliance in terms of how I actually should be operating my fund. So what's cool about this conference is you could have guys from 100 different walks of life within the world of real estate investment and finance, but they could still find something really unique and valuable to take away from it.